And it's the first edition for the week. This is Business Morning live on Channels Television. Wherever you're watching from, good morning and thank you for joining us. I'm Ladi Williams. First off, let's take a look what's happening in the news. Crude oil prices fell to a 7-week low today, extending declines after the previous sessions slid on concerns about excess supply after Japan said it was releasing oil reserves and over demand from a worsening COVID-19 situation in Europe. Brent lost 57 cents to $78.32 a barrel, and U.S. West Texas Intermediate crude futures was down 39 cents at $75.55 a barrel. WTI and Brent prices hit their lowest since October. Earlier in the session, they slumped around 3% on Friday. Investors are watching developments in the Middle East after Saudi state media reported early today that the Saudi coalition fighting the Iran-backed Houthi movement in Yemen said it detected indications of an imminent danger to navigation and global trade south of the Red Sea. And Nigeria's economy is recovering from a historic downturn as it benefits from government policy support, rising oil prices, and international financial assistance. And that's according to a statement by an International Monetary Fund team at the end of an official visit with Nigerian authorities. The IMF team also noted that although the COVID-19 pandemic has been managed, the economic and social impact is more daunting with rising food insecurity and increase in poverty levels. The team, however, recommends the complete removal of regressive fuel and electricity subsidies, reduction of administrative measures to allow for a market-clearing unified exchange rate, and a more open trade regime to unleash the growth potential brought by the African Continental Free Trade Agreement, among others. The president of the Africa Development Bank, Dr. Akinwumi Adesina, has been speaking of the potential of the marine industry towards job creation and economic development for the African people. Dr. Akinwumi, who was speaking virtually during the second Growing Blue Conference, explains that in spite of the huge potentials inherent in the marine industry across Africa, the sector has been experiencing low productivity owing to weak policies, environmental pollutions, as well as climate change. Do take a listen.
Africa is especially well endowed to tap into the blue economy. The continent has maritime zones that stretch 13 million square kilometers, encompassing territorial seas, continental shelves that also stretch up to 6.5 million kilometers. And of course, 38 African countries are coastal. Yet, these resources remain largely unexploited. And where they are exploited, they are done in ways that are not sustainable. And the sustainability of our planet and our oceans is threatened today in ways that could become irreversible without strategic interventions. Today, the world and Africa's blue economy faces code red. We must do all we can on climate change to turn code red to code blue for a more vibrant and sustainable blue economy. Your Excellencies, ladies and gentlemen, the African Development Bank Group is leading on climate financing for Africa. We have committed to doubling our climate finance to $25 billion by 2025. We are devoting a significant share of our climate finance to climate adaptation, which is Africa's main challenge. Climate adaptation receiving 63% of our climate finance in 2020. This, of course, is the highest among all multilateral development banks or bilateral development institutions globally.
All right, now to our first conversation. It's World Investor Week, a global campaign to raise awareness about the importance of investor education and protection. One of the primary reasons why people struggle with money is their lack of financial literacy or the inadequacy of their financial knowledge. many people do not understand how money works apart from making and actually spending it. Well, the Securities and Exchange Commission set up Financial Literacy Technical Committee to sensitize the public on the benefit of smart investing. Now, to make sense of all of this, we have Mrs. Tony Sani, Group CEO, Emerging Africa, and Chair of Financial Literacy Committee. Great to have you on the program. Good morning.
Good morning. It's a pleasure to be here. Thank you, Ladi.
Great to have you. Well, so it's World Investor Week. Tell us about the significance of this, week set aside for investors.
Thank you. So the World Investor Week is a week set up specifically by the IOSCO, that's the International Organizations of Securities Exchanges all over the world, to mark the importance of investor education. It's a week that exchanges, securities regulators like the SEC in Nigeria, and operators, capital market operators like ourselves, are expected to take time out to educate the investing public on their protection and on the importance of investor education in the markets. Specifically this year, the theme hovers around, first of all, sustainable finance, sustainable capital markets. And I'm sure we all heard the president of the AFDB speaking a few minutes ago on the importance of the sustainability of our planet. And second theme is also avoiding scams and frauds. And the capital markets community, which I represent as the chairperson of the Financial Literacy Committee, is organizing a webinar on the 26th of November at which we're going to examine these two themes. We have knowledgeable speakers coming to address the market on how to raise funds in a sustainable way, and secondly, how to avoid being scammed. These are the two themes of the World Investor Week this year.
Okay, well, what kind of activities can investors actually expect within this Investor Week?
Oh, a lot of enlightenment activities, a lot of bell ringing activities by the various exchanges. In a couple of hours, I'll be joining the Lagos Commodities and Futures Exchange at a similar event just to raise awareness about investing and about knowledge for investors. The investors can also expect going forward events such as investor fairs at which operators will educate investors on the opportunities available in the market, on the risks involved in investing in the market, on the benefits of investments, on how to build wealth generally, and how to be in control and in charge of our own finances. The capital market remains a major vehicle for wealth building for investors, and we will continue to inform and educate investors accordingly. There will be bell ringing ceremonies at the various exchanges and capital trade points. There will be visitations to key stakeholders, even in the course of this week. Publications, a lot of activity on social media. I'm sure we all know that we're all in a digital age now, and one of the impacts of the coronavirus pandemic is that a lot of communication is now digital, as I am also joining this program online now. So we can expect to see a lot, even on the social media pages of capital market operators, of securities exchanges, and of course, of the Technical Committee on Financial Literacy, which I chair.
Right, and well, you are the chairperson of this Financial Literacy Technical Committee. Tell us, what this committee is all about, its objectives, and milestones achieved since its setup.
Thank you. So our objectives are to ensure that investors are knowledgeable about what it entails to invest in the capital markets. Our objectives are to increase financial literacy in general, to ensure that people understand money, understand how money works, understand how money is made, understand how money can be lost, and understand very importantly how they should be in the driving seat of their own financial affairs. People need to understand the discipline of budgeting, for example. People need to understand how to save money in the first place. People need to understand how, at the end of the day, to transit from saving to investing. And of course, people need to understand what are the trends in the market. Now, our committee has a responsibility to grow this knowledge and grow it all the way from the cradle, as it were, to the grave. And one of the key milestones we have achieved is the work we have gotten involved with to ensure that capital market studies are going forward in the curriculum of schools across Nigeria. So from primary schools to secondary school curriculum across Nigeria, our children, what the opportunity we didn't have when we went to school, our children going forward will learn all about the market and all about money, even as alongside their education. Another thing that we are working on is also to ensure that this capital market knowledge is also taught in programs such as general knowledge and even degree programs, first and second degree programs in Nigerian universities. And that is also in progress already in collaboration with the National Universities Commission. The work of our committee is also to engage all the tools of communication, such as the television, which we are on right now, such as blog sites, such as social media tools, to ensure that Nigerians are constantly informed about the rewards and the risks of participating in the capital market. Our duty also is to promote investor protection by engaging with securities exchanges, engaging with capital trade points, and also, very importantly, engaging with operators on how to ensure that we have a fraud-free capital market in our operations. Thank you very much.
Fraud-free, that makes a lot of sense, because nowadays it's all fraud happening everywhere regarding investments, people losing money. But, you know, financial literacy report from the Central Bank of Nigeria shows about 53.4% of Nigeria's adult population do not know or only have a rough idea of what they have spent in the past week. Additionally, over 50% do not know how much money is available for their daily expenses. What do you make of this?
It's painful because if you don't know, if you can't track your spending, then definitely you're not in control of your finances. And like I said earlier, the starting point for financial management, personal financial management, is first of all knowing where you are today. That means, how much do I earn today? You need to look at your financial journey, your personal financial management as a journey. If I want to go to Abuja today, I need to know that I am in Lagos. And then I need to know where I'm going, which is Abuja. And then finally, I need to know how I'm going to get there. So the same way, you need to have an understanding of your net worth, your personal net worth. You need to have an understanding of your regular income. You need to have an understanding of what are the sources of that income and how you're going to raise the sources of income. Then very importantly, you need to track your expenses. So that point you have made, that 53% of Nigerians, adult Nigerians, do not know how much they have spent, how much they're spending. It's a cause for concern. It's part of the reason why on our social media pages every day, this committee is posting information about personal financial management. We must track our expenses, we must track our savings, and we must convert our savings into investment. Thank you.
And the report reveals that there's a genuine interest, in financial literacy. Also reveals a significant, knowledge gap. Millions of Nigerians looking to achieve, financial independence, create wealth for themselves. They're hungry for knowledge, but the question now is, where can they find this knowledge?
Oh, they can find this knowledge on the website of the SEC. They can find this knowledge on the pages, the social media pages of Technical Committee on Financial Literacy. They can find this knowledge on the websites of capital market operators like ourselves, the Emerging Africa Group. They can find this knowledge also on the websites of the trade groups within the capital markets. We have multiple trade groups within the capital market, Fund Managers Association of Nigeria. We have the Association of Issuing Houses of Nigeria. All the trade groups also have this knowledge on their website. And
All
of
right.
course, some of us have authored books. And one of the objectives of our committee is to encourage operators to write books. So some of us have authored books. I have authored a book, A Guide to Investing in Nigeria, Riding in the Eagle. Those are the kind of places where you go for investment information and knowledge.
All right. From an economic viewpoint, how does financial literacy actually impact the Nigerian economy?
Wow, the financial literacy impacts the Nigerian economy on several levels. The first one is that the more literate people are, the more they will save. And saving is very important to creating a pool of wealth and growing the pool of wealth that will develop an economy. So, first of all, to mobilize domestic savings, we need people to understand why they need to save. We need people to understand how they can discipline themselves in spending so that they can save more. Secondly, the more we have financial literacy, the less people will lose to scams and frauds, and the less that they lose to scams and frauds. And some of these funds, unfortunately, are siphoned out of the country and taken to strange lands. We've heard some of the stories we've listened to. But the more we can stop this kind of activities, the more of these funds we have retained and invested in legitimate activities within our economy. It is also very important that people should be financially literate, because when you are financially literate, you have a higher propensity to create wealth. People need to be financially literate also because we need more people to be entrepreneurs, because it is entrepreneurs that will actually drive the growth that we require in this economy. And entrepreneurship without financial literacy is very hazardous.
Yeah, and when it comes to, new technology, investors have a choice to, either make risky investments, like take, for instance, the crypto market that has generated a lot of interest in Nigeria. How do investors balance, new tech, investing in new tech and the risk?
Okay, so the first thing we need to understand is that all forms of investment carry risks. The truth is that without risk, there will be no reward. So when we educate people and when we get involved in financial literacy activity, we're not telling people to avoid risk completely, because without risks, there are no rewards. In fact, there is actually there is a direct relationship between the level of risk that you take and the rewards you can expect. So what we tell investors rather is to understand what you are investing in. Understand how precisely your funds are going to be utilized, understand precisely how money is going to be made, and very importantly, understand yourself, your personal attitude to risk, how much risk you can actually absorb. And that will depend on your stage of life and your age. So back to, for example, cryptocurrencies. Definitely, there are high returns, extremely high returns in cryptocurrency investments, but there is also very high risk. So I would not encourage somebody who is like on the other side of, say, 60, for example. That would not be an investment of choice for them. But for younger people that have a longer life and, have a higher ability to absorb risk, you'll find out that it is those demographics, it's the Gen Zs that are very active, and the millennials that are very active in playing cryptocurrency. And even along the cryptocurrency continuum, there is, of course, the Bitcoin, which is probably the most stable amongst them. And you find out that some of the greatest investors internationally are also involved in Bitcoin investments and have made a lot of money. So bottom line is know yourself, know the regulatory environment in which you are operating. We know, for example, the Central Bank of Nigeria's stance on cryptocurrencies. Also, know what stage of life you are in investing, know what is right for you.
Know what is right for you. Thank you so much, Ms. Tony Sani, Group CEO, Emerging Africa and Financial Chair, Literacy Committee. Thank you so much for coming on the program.
You're welcome. It's been my pleasure to be here. Thank you for having me, Ladi.
All right, after the break, we have more conversations. That's in a moment. Do stay with us. This is Business Morning. Welcome back. You're still watching Business Morning Live on Channels Television. All the CBN's most recent quarterly statistical bulletin for the second quarter of 2021 shows that the fiscal operations of the federal government of Nigeria are resulting in fiscal deficit of 1.9 trillion naira, an improvement over the 2.5 trillion naira recorded in the first quarter. Relative to GDP, the deficit narrowed to 4.7% of GDP, compared with 6.2% in the first quarter of 2021. Although the deficit improved in the second quarter, it is still slightly higher than the 4.5% target set in the financial year 2021 budget. Well, let's break down these numbers now with Michael Ogoremi, macroeconomist and fixed income analyst at Chapel Hill. Dan, I'm good to have you on the program.
Yeah, good morning, Ladi.
Good morning.
Nice to be here.
Yeah, so what are the major factors influencing, the current level of fiscal deficit in Nigeria?
Interesting question. Well, I think that the starting point would be to say that when a government is spending more than they earn, there is a very strong possibility that they will have a high fiscal deficit, right? But then the peculiarity for Nigeria would be what exactly are the factors driving both components. So for revenue, I mean, we all understand that we have quite a weak diversification as far as revenue earning is concerned. From the expenditure side, you also note that we're spending quite a lot on subsidy, about 150 billion on a monthly basis. Security spending, is currently pent high because of the state of insecurity in the country. And then you also have concerns around the rising cost of debt service, right? So on the expenditure side, you have these three factors, pushing spendings from the government, at a very high level. But one of the key events that sort of fosters fiscal deficit in Nigeria, which most people I believe have probably not paid attention to, is the prevalence of recession. Based on my research, I found out that whenever an economy slips into a recession, it takes, by my own estimates, an average of 5 years to fully recoup the losses, that they sort of must have recorded based on that recession. So you notice that the Nigerian economy slid into recession in 2016, and to be very honest, we have not been able to fully recoup the losses that we garnered from that recession. And that is why you notice that since 2016, where the government recorded a new high level of fiscal deficit at 2.1 trillion, our annual deficit continues to increase. So when an economy have a frequent episode of recession, they will have high fiscal deficits.
All right, Michael, but is having a fiscal deficit really a bad thing?
To be honest, the answer is no. Having a fiscal deficit isn't necessarily a bad thing. And I'm saying that because as long as you are spending the money right, as long as you're using the money to make more money, it's not a problem, right? So you understand that when the government records fiscal deficit in a current year, most of the spendings, especially capital spendings, based on the higher expenditure that you have that year, you begin to see the impact of that on revenue in subsequent years, right? So what you would expect is if a government is recording fiscal deficit in a particular year, if they are using, the money, they're utilizing the money that they are spending judiciously, more in capital expenditure than recurrent, you begin to see, a turnaround in that fiscal deficit in the near term.
All right, so I guess it's how you're spending the money, basically. So do you see a connection between, the level of fiscal deficit and the size of Nigeria's GDP?
Absolutely, Ladi. I mean, so there is like a loop, that's the way I like to describe it. So a feed forward, backward relationship between, both variables. So here's the thing, right? If a government is, incurring a high level of fiscal deficits, the narrative would be that number one, they have the capacity, to finance that deficit. So what you notice globally is that economies that have high fiscal deficit most times have high level of GDP, and it also brings me to the earlier narrative that when a government have a high level of fiscal deficit, they must be spending that money in some sort of capital infrastructures, some sort of social alleviation programs that will sort of spur, the level of GDP. So in a way, you see fiscal deficits affecting the size of GDP. In a way as well, you see GDP determining, the level of fiscal deficit that a country can amass. So in both ways, I would say that for countries that have high level of GDP, they should, have a high level of fiscal deficits.
All right, let's look at the global oil market now. Since September 2021, the oil price has been above the $75 per barrel, but it appears that revenue has not been impacted. Do we have a new narrative that oil itself does not solve our fiscal deficit problem?
Yes, Ladi. Honestly speaking, the new narrative will be that we're currently in a world that is beyond oil, right? From a demand and supply perspective, to be very honest, the world has moved beyond oil. It's quite important to state that yes, we can't rule out the fact that oil is still very important. Currently, you still have quite a lot of industrial activities being powered by crude oil globally. But I tell you for a fact that in the next decade, thereabouts, you most likely begin to see a world. I mean, countries and economies that are running, without oil. So from a demand perspective, you have quite a lot of renewable energy, powered devices, that are currently being built globally. From a supply perspective, you also have quite a lot of oil producing economies and corporates going the cleaner energy route, because for them they believe that that's the future of energy, right? And so when you tie that down back to Nigeria, I mean, it's important to state that we should begin to look beyond oil as far as improving our revenue if we want to diagnose the level of our fiscal deficits. That's the big narrative there. We need to look beyond oil. Oil, used to be the savior in most people's opinion, but in current times, I don't really think that narrative holds.
Right, and with countries looking at cleaner energy now, about oil contributes less than 10% of our GDP, but over 80% of our revenue. Does this distortion have any implication for our fiscal deficit?
Yes, absolutely. So what you see is it's a structural mismatch problem. That's the truth about it. Um, my idea is, for an economy, to grow, you should, produce and export, more items that you have a competitive advantage in. And at this point, I'd like to state the difference, between what most people, assume to be comparative advantage, absolute advantage, and all of that. Yes, I mean, it's quite true. Economic theory will tell you that a country should produce goods that they have comparative advantage in. But honestly, in my opinion, I think that's the narrative is biased. For me, I feel countries should produce product that they have a competitive advantage in. And in that respect, competitive advantage speaks to the entirety of the production. What's the quality of the products you're producing? Do you have are you bringing in innovations and inventions to the things you're trying to sell to the world? How much of an edge can you amass above your competitors as far as exporting your product is concerned? And that is where Nigeria needs to pay attention to. So you look at the structure of our GDP, and what you notice is yes, we're exporting crude oil. Crude oil accounts for about 80% of our revenue, but it contributes only 10% of our GDP. But you have sectors like agriculture, you have sectors like trade, you have sectors like telecom. Both three sectors accounting for close to 30% or more of our GDP, which I think should be the areas we should be focusing on. To look at how can we latch on to competitive advantage in each of these sectors. So I mean, based on what you just asked, the truth is we have quite a structural mismatch problem as far as revenue earnings is concerned in Nigeria.
All right, quite a lot of challenges there. But what sustainable solutions can you propose to solve our deficit challenge? Is it more of revenue or expenditure? Some have said we actually have a spending problem.
Yes. Honestly, I don't think Nigeria have a spending problem. Yes, I mean, it sounds interesting, because the truth is, you need to spend for you to grow your economy. That's the truth about it. If you're not spending, your economy cannot grow. It's that basic, right? And so the only issue I have with spending in Nigeria is not the fact that we're spending too much, it's the fact that there's no transparency, in the way we spend the money. You decide to spend X amount of money on a project, but you're spending below that. So all of that transparency is just the issue I have, around, I'm spending in Nigeria. But I think the sustainable solution to Nigeria's fiscal deficit, comes from the revenue side. The truth is, if you earn so much, you really wouldn't be concerned about, how you're spending at the level of a country. That's the truth about it, because just like I said before, you need to spend more for you to grow your economy. And so it then becomes important for for Nigerians and even the Nigerian government to begin to look at, how we raise more revenue, beyond just saying, oh, we're trying to, trim the level of our expenditure each time we're trying to, structure out, our budget for the fiscal year. So I think the sustainable solution, to Nigeria's fiscal deficit would come more from the revenue side, and in that respect, I would say that we need to pay attention to growing our tax base. And tax base, again, would be, let us focus on the sectors that contribute more to the economy, sectors where we can latch onto competitive advantage, And I will reiterate that sectors like telecoms and sectors like agriculture remains one of our strong suits as far as, getting competitive advantage is concerned. We need to try and get more private sector capital into those space so that we can have a higher tax base and raise more tax revenue from those places.
All right, Michael. Well, MPC meeting commences today. What are your thoughts on the outcomes that will be communicated tomorrow?
Well, I think the third quarter has been favorable, to policymakers as far as I'm concerned. Inflation currently at, 15.99%. It's quite a disinflation, right? You look at the recently released GDP reports printed at 4.03%. And I particularly like the fact that on a quarter-on-quarter basis, real GDP grew by over 10%, right? You look at, some other indicators, you notice that, yes, the third quarter was quite favorable for the economy. I mean, look at exchange rate, for instance, as well. We recorded, quite some level of appreciation towards the end of the third quarter, and then, bringing it down to October and November. We see some of the policies, of the CBN around discontinuity of, sale of FX and the, restriction, the prohibition of, publication of parallel market exchange rates. We see all of that sort of affecting the parallel market positively. Quite a little bit of volatility in the I&E markets. But put together, it's very clear that the economy sort of reacted very positively to fiscal and monetary policy intervention. Based on that, to be very honest, I do not think the CBN would want to make a switch back to monetary policy normalization. I think that they will keep the monetary policy rate at 11.5, and I mean they would also want to pick a cue from global central banks. Most of the global central banks have communicated clearly that despite the fact that inflation continues to rise in their economies, they will most likely rather stall till 2022 before they decide to make that hawkish stance as far as monetary policy is concerned. So when you put all these factors together, I'm very, very certain that the CPM will most likely keep the monetary policy rate at 11.5%.
All right, a lot for the Monetary Policy Committee to chew, but we'll see how it goes tomorrow. All right, Michael Ugurami, macroeconomist and fixed income analyst at Chapel Hill Denham. Thank you for coming on the program.
Thank you very much, Lady.
All right, now for an opening call to the market. Will Ibong, well, last week wasn't so good, was quite bearish in the equities market. What do we have?
Laddie, like you rightly said, the equities market was quite bearish, but before we go over there, I just want to also just jump in and talk about what happened in the forex trading forex market. And rightly, as Michael Ugurami has said, and a question you asked him about revenue, rising oil prices and revenue, we see little impact in our forex liquidity because we're looking at the forex trading last week. We saw that the total turnover of transactions carried out at the FX and the sports and futures market decreased by 9%. 9.01% week on week to $683.17 million. And that's from about $750 million that was recorded in the previous week. And also in the previous week, there was a decline. So we're seeing this decline despite rising oil prices. And the impact on revenue is not being felt so much at the moment. So breaking it down, we see that the total value of transactions at the FX spot markets also fell by 1.35% to $537.48 million against the previous week. And meanwhile, the Naira, luckily the Naira rose, closing that's at November the 19th, by 0.04% week on week to 413 Naira 45 kobo against the dollar at the Nigerian Autonomous Foreign Exchange window, which is the NAFEX window. And that's compared to 413 Naira 62 kobo, which was posted in the previous week. And now let's move over to the fixed income market and see how that fared last week as well. We see that the bond market sustained mixed sentiments last week, with most of the selling concentrated at the mid-end of the curve. Now, at the close of trading on Friday, the market closed on a mixed note, and overall average benchmark yields closed at 8.44%. That's indicating a week-on-week rise of 1.53%. And at the Treasury bills market, the Treasury bills started the last week on a quiet note, but activity picked up into the midweek, and at the close of trading, the market was bullish with selling interest seen across all the curves. So we also at the OMO market. So we quickly go to our guest, Ladi Bello is standing by to tell us what happened at the fixed income market last week and factors that influenced it. Good morning, Ladi.
Thank you for having me.
Okay, so could you tell us quickly what factors influenced the investor segment in last week's trading? Because we saw that the Treasury bills market closed bullish while the bond market was mixed. So what factors influenced investors' trading activities?
Okay, well, last week we saw both mixed sentiments in the markets within the Treasury bills and the bond space. On Thursday, the CBN came to intervene in the market by floating an OMO auction, essentially mopping up the excess liquidity in the system. We saw subscription remain largely higher than what's usually offered, and that was no different than last Thursday's auction. But by and large, stop rates were maintained at around 7, 8.5, and 10.1% respectively across the offered maturities. The bullish sentiment intensified last week. Despite the illiquidity in the money market, we saw firm bids across board as local players continue to scout for Treasury bills, especially NTB maturities within the space, given the reduction in stop rates from the preceding auction by about 49 basis points. Right now, the maturities in the market on the long end, it's a stretch, finding levels above the 6% handle. Within the bond space, we did see the DMO come in again within the bond auction. We saw stop rates being maintained on the short and medium tenor maturities, while the long end, that's the 30-year reopening, we saw the rate inch up by about 10 basis points to close around 13.3%. So by and large, the activity last week was contributed. The contributing factors last week were regarding the liquidity in the system, as well as the investor appetite. Currently, we're seeing more interest or sentiment skewed towards the shorter dated instruments, as counterparties having challenges forecasting into the activity that would hold, especially next year as we approach the 2023 elections.
So if we're seeing interest on the shorter dated instruments, why is there a drop in the long end? Especially you mentioned at the bond auction, there was a drop at about 10 basis points for the long dated bills or papers.
Exactly. So we've seen interest skewed towards the OMO maturities, the Nigerian Treasury bills, as well as the short dated bonds. That's the 2023 all the way down to the 2027 instruments. We're seeing counterparties stay away from the long duration, given the swings that we've seen in recent times. The auction closed at around 13.3%, like I mentioned, and we haven't seen any form of rally. Market is still around that rate. So local players especially are keeping their funds, their idle funds, and placing it within the shorter part of the curve. Tomorrow, we also have the MPC that will be conducted. So we'll see how things play out. But there are two things that are positive when we look at the government's pace, which is the GDP, which is the highest quarter-on-quarter growth within this regime. Yes, it's slower growth when compared to the preceding quarter, but it's still fairly strong results. Also, inflation has been trending down for the last consecutive sessions.
Okay, let me jump in there, Laddie. You're just talking about the CBA monetary policy, which is quite big because we're starting today. So
yes,
what are your expectations? I know you were giving that, but what are your expectations and how do you think it will influence the fixed income market this week and possibly for the rest of the month?
Okay, well, in terms of any shocks or reactions, I don't expect to see any. Like I said, the CBN's monetary policy committee would meet tomorrow, and I expect all policy levers to be maintained. So the key lending rate to be maintained at 11.5, and alongside the asymmetric corridor of about 100 and minus 700 basis points around the NPR. I expect the MPC to also maintain or retain its cash reserve ratio at about 27.5% and liquidity ratio at 30%, given the strong results that we've seen this quarter in terms of GDP and in terms of the continuous decline in inflation. The CBN has continued to intervene in the real sector. We've seen CRR debits continuously in our market. And by and large, the government is able to borrow at a fairly cheaper rate when compared to other tenors that we've seen in previous years. We've also seen the increase in repatriation, so of the FPI, so the real money guys who have brought in money in the early parts of the year and also last year are able to take out their foreign currency with a bit more ease now. So we're seeing the parallel market also decline in rates. So by and large, there's no real reason at the moment why the policy levers should be tampered with at this time as we approach the end of the year.
Thank you so much, Laddie Bello, for that input. That's Laddie Bello, fixed income dealer at Access Bank. Now, we'll just close with the equities market, where the bear dominated last week's trade. 4 out of the 5 trading sessions, and that's why we say 0.12 week-on-week loss. Laddie, profit-taking continues in the market, and we are hoping that possibly this week we'll get a respite. Hopefully.
Hopefully, and you had quite a lot of laddies on the show today.
Yes.
All right, Will, let's see how the week plays out. Thank you so much. All right, after the break, we'll go to London for updates right there in the UK with Juliana. That's at the moment. Do stay with us. Welcome back. Now let's cross over to the UK with Juliana live there. Great to have you, Juliana. Well, Prime Minister Boris Johnson is to announce electric vehicle points, charging points will be legally required in new build homes from next year. What are you hearing about this?
Yeah, good morning, Laddie. Well, the Confederation of British Industry, which is a huge business lobby group here in the UK, they represent about 100,000 businesses. They're holding their annual conference today, and Prime Minister Boris Johnson will be the keynote speaker. Whitehall have released some statements ahead of the Prime Minister's speech, and he is expected to say that, as you were saying, from next year, every new home and building that's built in the UK must include an electric vehicle point. Now, they're relatively cheap. They cost about £800 per unit, and the government have already put aside billions to contribute towards the installation of these units.
All right, seems like we lost Juliana there. Well, we'll try and get her back to finish her thoughts there on the new house buildings in the UK getting charging points. All right, let's take a look at what's happening in the crypto market right now. Take a look at some crypto news there. We see that the Binance Smart Chain Fund has collaborated with CV Labs Global Incubation Program to drive blockchain adoption in Africa and invest in blockchain's wider applicability to solve problems and create new markets. The accelerator aims to invest 100 startups from the African continent over the next 4 years. All right, I think we have I think we have Juliana back. Hello, Juliana. Yeah, we lost you. We lost you there while you were trying. Maybe you can finish your thought on the first question.
Laddie, if you're talking to me, I can't hear you, I'm afraid.
Okay, all right. Okay, I guess we're having communication breakdown there. All right, let's keep on looking at what's going on. Oh, Juliana, can you hear me now?
I can hear you now. The magic of technology is working.
I know, right? All right, so Black Friday is coming up this week, and it seems it's mixed reactions with, some retailers planning to boycott in protest. What's the issue?
Well, I suppose the issue really is for smaller businesses because, of course, Black Friday, massive discounts only really helps businesses that have got massive bottom lines and can take the discounts. It's a huge celebration that's been exported, or should I say imported into Britain from America. It starts on Friday, the 26th of November, but all you need to do is look online and you can see most retailers are already promoting Black Friday sales. There are some big retailers here in the UK that are not taking part, most notably our Next and John Lewis. But there are other issues, and one of them being the supply issue. A lot of retailers rely on Black Friday to get out all of these technology goods, but with the semiconductor shortage, there are some stores that just don't have the items, Apple being one of them. They've also had to kind of take away some of the chips from iPads to put into the new Apple iPhone 13, and we know that is a hot deal. Also as well, according to some data, 83% of businesses in the UK say, this Christmas is make or break. Can they afford to have heavily discounted goods when they're trying to compete with the titans like Amazon? That's a massive question, but we'll have to wait and see. It is a big day. It's definitely in my diary. When you've got 3 children, any little, discount does help, I've got to say, Laddie.
Oh, yes. Oh, yes. Hopefully we actually buy what we need. All right, Juliana, thank you so much.
Thank you.
All right, let's take a look at the crypto market. We see Bitcoin failed to clear the 60K resistance zone against the US dollar. See, Bitcoin is actually moving lower and could extend losses towards the 55,000 in the near term. We see it's trading this morning down about 3%, $57,283. And the volume, not so much volume this morning, about $29.30 billion. Market cap at $2.56 trillion is down 2.96%. We see volume there up about 8% due to major sell-offs. You see Ethereum, $4,169, down 4.40%. 24-hour volume, about $16 billion. And top alts by market cap, we see just Solana in the green right there. Let's bring in Olumide Additional now. Hello, Olumide.
Hello, Laddie. Red Monday.
Red Monday, yeah. Happy Red Monday. It was a Red Friday. Now we have a Red Monday. Well, I saw this report today showing that Nigeria is no longer on the top list of countries with the highest interest in Bitcoin. What happened?
It's not surprising to see such data reports. Understanding the fact that the CBN clampdown on crypto market is unprecedented, you need to understand that even on a weekly parameters, Bitcoin trading volumes on P2P, particularly on Paxful and local Bitcoins, have plummeted to 43%. Also, you need to also understand that Nigerian banks are also reinforcing the dynamics at which they restrict Nigerians that want to get exposure directly to the crypto market. Also, we are seeing that arbitrary traders are taking the opportunity about the restriction from financial institutions into the crypto market, charging exorbitant rates as high as 600 naira to the dollar. So we are seeing that has discouraged a number of young Nigerians trying to discount from the opportunities in the crypto market. So those are the parabolic playing. And, the positivity around it is coming for the INR. The INR presently has about 500,000 users, and the CBN would soon announce its MP. There's going to be traction around discussions on how the crypto market will move forward. But it looks like it's a dim week for the Nigerian crypto community. Also, Salvador seems to be on the other end in having a pro-Bitcoin president. They're already planning to issue Bitcoin-backed bonds. They already using Bitcoin as more of a financial asset. Understand the fact that it's already a legal tender. So El Salvador displaced Nigeria, and Nigeria fell to the second position.
Well, see, the El Salvadorian president, they're quite bullish on Bitcoin, actually making a Bitcoin city. Anyway, Olumide, we see Bitcoin having a pullback today. What's driving sentiment in the market right now?
Sentiments are the same narratives. We are seeing the fact that some long-term investors are cashing out, understanding that the fact that Bitcoin recorded some gains in the past month. So we're seeing long-term investors pulling down. Also, you need to understand that cash inflows in the market is suffering some form of drawdown because of the stronger dollar. So investors are being cautious that at some point, the United States will increase interest rates, and when interest rates are increased, it means that liquidity in the market will tighten. So investors are trying not to be caught off guard. Also, we are seeing the fact that COVID-19 is also raising its head, especially particularly in Europe. We see Austria announcing complete lockdown. So investors are becoming nervy, and they see the safe currency that the dollar as the safe place to keep their money rather than risky assets like Bitcoin. So Bitcoin has broken below the $50,000 mark, suggesting that more downside risk will remain, except the fact that we see the narrative against maybe we see weaker U.S. economic data coming out this week, which seems to be unlikely because most of the data coming from the world's most powerful economy suggests that the economy is firing all cylinders, despite the fact that we're seeing other markets cooling off.
All right, but what's your outlook for Bitcoin this week, price?
My outlook sadly for Bitcoin this week is bearish because we're seeing the fact that the dollar seems to be pulling to a 60-month high, telling you that the odds are with it. And we're also seeing the fact that the weaker retail investors are creating some form of panic. But I think relatively we're still in a bull market because if you look at year to year, Bitcoin is still having decent gains. So I think for the week, it looks like Bitcoin might not break above $60,000. But if it should, then I think the positive momentum would resume.
All right, Olumide, let's see how the bulls play it in the market. Thank you so much, Olumide Adesina, financial market analyst.
Yeah, thank you very much.
All right, that's it on the program. Thank you so much for watching Business Morning today. Remember, you can join us at 1:30 for Business Incorporated for more business stories on the African continent and beyond. Thank you so much for watching. I'm Ladi Williams. Bye for now.